So Gerry, what's your take on this new strategy in private equity?
Well, you have to define private equity too.
Right,
There's different types of these asset aggregators. Look, I mean, part of the job of the commissioners, and I agree with your comments on Adam, part of the job of the commissioners is to continue this linear progression in valuations. I think it's going to be hard to do that at these valuation levels unless you institutionalize the capital. And so there's only so many decibillionaires that can show up and keep this progression going. So I don't think the leagues are going to turn on a dime, but I definitely think there's room now given how sophisticated these assets are, given the scale and breadth of them, given what the opportunity set is going forward. I think there's absolutely room for professional investing and institutionalized investing. But I think they're going to walk before they run, so you're not going to see it on a dime. Some of these asset aggregators that buy minority stakes in teams do provide a liquidity function. One of the tough things about sports, sports is only what it is today relatively recently. It wasn't really that way before. These were hobbies for relatively wealthy people. And so and there's a lot of minority owners in these things that really don't have an ability to get out. There's no liquidity for minority investors, and so that's the first step towards maybe the entry point for professional investing.
I think it makes an important point about differentiating the funds as well, because funds like Arctos, RedBird, Dial have specialized in the area, and they know the ownership, they know the ball game. I think when general private equity gets involved, you have to have a line. Certainly, Bain Capital, we would not buy a sports team because we have to have alignment with our investors, and we're telling our investors we're going to get a 20% rate of return. We're going to look at the fundamentals. We're going to look at cash flow. We're going to look at transforming businesses. So I think to buy equity investments in sports teams, you have to have an investor base that says we're buying into a rare asset class more like art, and you're looking at appreciation more like art than you are at business building. And so funds like Arctos, their clients know that, and they look for capital preservation and a lower rate of return than you would as a general private equity firm. Now, I'm not saying it would never happen, because maybe there's some great turnaround situations where you can make the numbers work, right. But it's very hard to make the numbers work on a private equity basis to control the club and buy equity when you're buying a club for $4 billion, $5 billion, because to triple your money, there's not much debt involved in these things. So to triple your money, the club's got to be worth $15 billion, and maybe that'll happen someday, but that seems like a large number to me.
Yeah, that makes sense.
So Mitch,
what you guys...
what I'd say is I agree with that. We won't make an investment. Our investment in the team side is we don't treat that differently than what we do on the business side or the business of sports. And so we won't make an investment where we're passive. We don't have our hand at least on the co-control. And as I said before, we underwrite business plans going into these things so that we have an eye on how we're going to generate cash flow, and we're going to rely on that and the way we do it on any of our other companies. The only question is liquidity or monetizing.
Right, and you're a specialist in the area, so you know
exactly
where the pitfalls are.
Right.
It's hard for a general private equity fund to look at one sports deal.
Totally agree.